Good morning, everybody. Mike Vacchi, Princeton Trader, here with your Tuesday market webcast. Okay, daily chart, and I mean what you've seen since June the 29th is just a steady move on the daily chart of higher highs versus the prior day high, higher lows, higher highs, higher lows, higher highs. So until the bears can break that pattern, we will continue to progress towards the upper band, which is starting to come in a little bit. It's about 32.03 right now. But, you know, until this pattern's broken, so yesterday's low, 31.21 quarter. We're trading 31.52. They need to bring it in. They actually ran it up nicely, the close yesterday into early Globex. Here's the hourly chart. You can see they ran it up early, and then it turned into a really nice short. So we were short. Then we flipped long in the low 60s into the close yesterday. We got stopped out up here, and then you had the hard break from China. We didn't trade the hard break. We traded the lower high that came back into the blue line here, which is your hourly mid-band. That it just couldn't convert it. It tried for about 4 hours and it couldn't get it done. So, you know, it was a situation where, you know, it gave you an opportunity. We were in low 70s. And once it broke the second time, it could not get the hourly mid-band back. And then you saw it take a deep dive. Traded as low as 31.38 quarter, but you got a ways to go if you're going to deal with this low from yesterday. And until that low from yesterday gets broken, you're going to see more of the same. You're going to see these dips get bought. You're going to see higher highs and higher lows on the daily chart. And we'll continue to march. The next area they need to deal with is the pre-FOMC print up at 31.96 half. So the bears are going to have to do everything they can this morning to fight off a dip buy. The way the day sets up, it sets up for a pretty choppy, whippy open. But if the bears can survive, if the bulls can survive that, they can come in and buy the dip. Now, any dip buy still has to deal with the hourly mid-band, which is way up at 60. That for me is the real bull-bear delineator on the day. As long as the bears hold serve and every move into this hourly mid-band is held, it provides the opportunity for lower lows. Lose this, and you start thinking about going back and testing the highs. So just for the open today, we opened about a half hour. Hourly mid-band, 60 half. Volume weighted average price, 56 and change. Your daily pivots there at 54.75, 5-minute mid at 31.50. Our proprietary moving average is 31.47. So price always loves to fight over the 50 area, and the kind of open we're looking at today sets up for some whip and some chop in and around 50, and then making some kind of a decision to either make a move to the overnight lows or go ahead and test the hourly mid-band. All right, everybody have a great day. Be safe, be healthy, take care, trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.